Our lesson for today is all about introduction to merchandising business with recognition to value-added tax. So this is a chapter 8 to 9. This is the continuation from our carpu commercial problem. So for you to know how to solve the carpool commercial problem, so let me discuss to you the theory behind on how to solve the problem. Okay, so we have a nature of merchandising business. So there are two major activities involved in a merchandising business. We have the buying and selling activities. Okay, so as you remember, during our previous transaction, so there are two negotiation in the problem, no? So buying, no, when you are purchasing, and selling when you are selling items or goods or commodities. Okay, so we have inventory items. So there are two methods of keeping inventories where the account title to be used for the cost of goods or commodities but depends upon the method used. So they are periodic and perpetual inventory systems. So what uh, some of you will be asking, or some of you will be asking that what would be the difference between periodic and perpetual inventory systems? Well, anyway, periodic inventory system is characterized by using the account title purchases when buying goods or commodities. So purchases are cost by nature. Okay, so the term purchase discounts, purchase returns and allowances, and freight in are also commonly used. So uh, always remember in periodic inventory system, so when you see the terminologies purchases, so of course purchases is that's the items that you are buying or you are purchasing or you bought, no, and of course that also a cost to your business kay nipalit man ka so gasto jud na. And then the purchase discount, the term purchase discounts, no, that belongs to periodic inventory, because if you're going to pay that items on account, like for instance you are asking on credit to the seller, so if you are paying that for a uh, uh, before the due date, no, you paid your debt before the due date of the invoice, so of course you can gain or you can have the purchase discounts. And if there will be some items are that are defect, or there are items that was uh, what do you call that one, expire, no, so if there are items expire, so you're going to return that items to the seller. So the terminology is purchase returns and allowances. And freight in, so that's all that's commonly used in the business, especially if you're purchasing items, so there might be shipping fee already. So if that would be the cost of your items, and then the shipping fee is add on already and you pay that whole amount, so that's a freight in. So most probably if you are purchasing, so since stock cards are not used in this system, so it must be at the end of the period. So a physical count of merchandise is conducted to set up ending inventories. So there's no more stock cards, no, use in this system. So since wala man tayo mo yung mga stock cards nga imong ilista-lista kung pila ang nasud o pila ang nagawas, so you're going to count that physically, no. So therefore, if you found out a merchandising business like what sari-sari store in Samang Nayon, no, so we have here the Black Tinda in Sawang, we have also the Alturas Mall, BQ Mall, and so on and so forth. So there will be physical count happen, no, especially if they are not using the perpetual, so they are using periodic inventory system. Okay, so let's proceed to perpetual inventory system. On the other hand, it is characterized by using the accounting title merchandise inventory when buying of goods or commodities. Okay, so merchandise inventory is an asset. So under perpetual inventory, merchandise inventory, so that belongs to an asset. That's the accounting title used in perpetual inventory, and merchandise inventories belongs to current assets. And under this method, there is a continuous updating of the ins and outs in the stocks cards every time there are purchases and sale of goods. So reminders that in this system, so the in and out of stocks into your business is updating, no? So the quantity and amounts of the stock cards are being filled up out the accounting period or the whole year round. It facilitates better control because it provides information of merchandise inventory on hand. Okay, so in other words, whenever there will be a purchase items into your business, so it is filled up in the stock cards, and if there will be sale or sold out items, so it is also deducted from your stock card. So I have a sample image of stock card and I will show to you. Okay, this is an example of stock card wherein you can find out in the card the supplier, the name of the supplier, Sarangani Cattle Ranch, or we can say this is Alturas company or ICM company, your supplier of your items. Our items is indicated in the description, the top round beef. So it can be chicken, it can be any meat, no? So example only is top round beef, no? That's we order from the Sarangani Cattle Ranch. So we have the date, unit cost. So the we have the debit, we have the receipt, the value that you receive, and the issued is your credit, and the balance. So this is your running balance. It is more likely a general ledger of your items. And example, during January 1, so you purchased 240 pesos cost of top round beef. So the quantity or the number of kilograms, we have 50 kilograms. So simply multiply the 242 times 50 kilograms, so therefore 12,000 pesos. Okay, so if you remember the score monitoring that I let you to solve last time, that the score is cumulative. So if you receive score, you will just add your first quiz to the second quiz, and including the denominator, the HPS, the highest possible score also is increasing. So this is just like this, but of course that's difference because that's your scores. We're going to get the percentage or your rating, but here we are going to determine if how many beef will go out and how many beef goes in. Okay, so therefore in January 8, okay, so we order again 240 is still the cost. Then the quantity is increasing, so it's 100 already. Then 100 times 240 is 24,000. So a total of 150 kilograms. So you will just simply add the 50 kilograms to 24,000, rather 50 kilograms to 100 kilograms, so therefore 150 kilograms, so a total of 36,000. Okay, so then January 20 you ordered you issued 80 kilograms, so there are customers bought or purchasing your top round beef, so you give that to the customers. So you sold to the customers, which is 80 kilograms, so amounting to 19,200. So 70 kilograms is left in your top round beef. So what 150 kilograms minus 80 kilograms, so therefore 70 kilograms. So your ending inventory of top round beef is 16,800. So, you have already the cost of sales, and you have already in the ending inventory. So you don't need to present or to solve another ending inventory and cost of sales, no, because you have already in the stock card. So, that's the stock card presentation, and you can use this for the incoming business of your family or yourself, no, especially if you are really love in uh, pursuing business. Again, so there in perpetual inventory system, so there's no need to set up ending inventory because the stock cards already reflects the cost of the sales, which is the 19,200 pesos, and the inventory and is the amounting to 16,800. So however, physical inventory count may still be conducted to check the accuracy of the stock cards or control cards, no. So it's better that you, if you are engaging business, so you need to do the physical inventory system, even if you are using the perpetual inventory system, for us to check accuracy of the stock cards, because there are a lot of uh, employees in the merchandising business or any type of businesses that they are the one uh, who make anomalies. So they are the one who make anomalies. So in the system, it is stated correctly and properly, but we don't know in counting behind the stocks in your bodega or your stock room. So there's no more left or shortage of numbers of items already. So it is happened, no, uh, it has happened last year that, for example, the San Miguel beer, so it is presented in the financial position or financial statements of the company, very good condition. They are really profitable and they are saleable, but it turns out that when they are doing the physical inventory, which is the periodic inventory, to check if the the result from the statement or from the perpetual system is compatible or uh, balanced with the physical counting. So it found out that uh, the driver and the agent are really uh, combine each other and understand each other, and they are making anomalies, so they can sell that to the customers, no, so far from their places, no, especially for the panel, and most likely kaning mga gasolina, no. So after they deliver from their customers, so they're go if there are some left of the gasoline, so they will be selling that to the streets, no. So that's one of an example. So that's why we need to do the physical counts and do not just depend to the system. Okay? So let's proceed to discount terms. So the following are the common discount terms bought for purchases and sales. So we have 2/10, comma, n/30. This means that if the account is paid and collected within 10 days from the date invoice, a 2% discount can be availed, and no discount if the account is paid or collected after 10 days or from 11 to 30th days. So always remember that you can avail 2% if you are paying or you are collecting uh, your account to your customers 10 days 10 days before the due date, no. Okay, or 10 days according to the or from the date invoice, no. Kung kanus agi gi resibuan ang imuhang uh, pangpangutang, so nibayad ka gikan sa pagpalit nimo hantod ni 10 days, so you can avail 2%. But if you are paying beyond 10, so 11 to 30 days, so you cannot avail anymore the 2% discount. So we have 2 over 10, 1 over 20, and over 30. This means 2% discount can be availed if the account is being paid, collected within 10 days from the invoice date, and 1% if paid, collected from the 11 to 20th days, and no discount anymore if 21st to the 30th days. So 2% ni siya over 10, you can gain 2% discount if you will be paying until 10. So if you are paying 11 to 20, so only 1% is your discount. So beyond 21 to 30, so no discount anymore. From the word N over 30, so no discount anymore if mulapas ka ana. Okay, so we have 2 over 10 EOM. This means 2% discount can be availed if the account is paid collected 10 days after the end of the month. So 2 over 10, so you can gain 2% discount if you are availing the 1 month and 10 days, no, kanang EOM end of the month. So imagine you're given 10 days allowance after the due date, after a month from the date invoice. So 1 month and 10 days, you can still avail the 2% discount. So that's the discount terms. So if you found out these terminologies or these terms in the problem, so do not forget this one. But probably most of the time we are using the 2 over 10, comma, and over 30 for the discount terms. Okay, so that's all for the discount terms. So let's proceed to cash discounts and trade discounts. The term cash discounts has two connotations. It can either be purchase discounts and sales discounts. Depending upon from the whose viewpoint the term is used. From the viewpoint of the buyer, and it is called purchase discounts. And from the seller point, it is sales discounts. So that's the two connotation. Remember that one. So if the viewpoint of the buyer, we as the buyer or the purchaser or the one who bought, so that's a purchase discounts. You can avail purchase discounts. If you are the seller, you are the one who sold the items, so you can avail sales discount. So there is a sales discount intervened. Okay, so we have the example problem. Amount of merchandise 30,000 and 2% cash discount and availed if paid or collected within 10 days. So the deadline for payment was met. So here's the computation. So amount of merchandise we have 30,000 pesos. So less 2% discount, 30,000 times 2%, so 600 pesos. So net amount paid or collected 29,400. Since the deadline for payment was met, so we can avail 2% discount. Okay, so therefore when you are purchasing, not anymore 30,000 is the amount that you're going to pay. So 29,400. So you have a discount 600 pesos. Unlike cash discounts, no, we have trade discounts. It is spot discounts or outright discounts from cash or account sales that a buyer or seller can avail but are not recorded in the books of the business. So we have the trade discounts or spot discounts, just like if you are selling a land, diba? You are selling a land for 100,000 pesos, and that land, if you sold that land, so it is stated from the owner that 90,000 is my selling price, but if you sold that into 100,000, so you can receive 10,000 pesos. Kaya 90,000 man ang kang owner sa land. Yeah, if you are the seller or you are the agent, so imong gi sell o 100,000. So of course you can avail the 10,000 commission. So just like this one, no? Example, 2% trade discount on merchandise purchase sold amounting to 30,000. So this is the same problem, and it is purchasing, no? Merchandise purchase. Computation. List of price 30,000 pesos. So for example, 30,000 pesos, and the trade discount is 2% times 30,000, so 600 pesos. Okay, the invoice price is 29,400. So the selling price is 30,000, but the that but you, the one who sold the items, you receive 2% discount. So you sold 30,000, but 29,400 ang imong gihatag sa katong owner sa land or owner sa items, so you gain 600 pesos. Okay, so that's the difference between selling discount and cash discount. Okay, so that's all for the cash discounts and trade discounts. So let's proceed to freight in and freight out. Okay, so freight or transportation expense on merchandise bought is recorded as debit to freight in or transportation in, while merchandise sold is recorded as debit to freight out or transportation out. So the former is considered as cost. The former is considered as part of cost and being added to purchases to arrive at the gross purchase, while the latter is considered business expenses. So, freight in is considered as part of the cost in purchasing your items, and the transportation out or freight out is the this is considered as your business expenses. Okay, so these are the pro forma journal entry. No, when you are the buyer or the purchaser, that you simply debit freight in. So the amount here, cash in bank is the credit and amount, and then to record blah blah blah. So you're the one indicate the explanation. Then the seller here, debit freight out, credit cash in bank, then explanation. Okay, so always remember freight in, if you are purchasing items, so there's already a shipping fee added into the items, and that's a expenses already into your purchases or to your business. So no, that's a cost already added for your purchases, for the items that you purchase. But the freight out, that's the business expenses. That's the time that you are purchasing items. Example, you are purchasing a hardware supplies like gravel or tiles. So uh, there's no transportation expense yet. So for you to avail transportation, no, so the supplier will be the one to deliver the items to your home. So simply add on, for example, 2,000 or 2,500 for the transportation expense. So that's the meaning of the freight out. Okay, so I hope you can now differentiate the freight in and the freight out. Okay, so another example. So in freight in, for example, you are purchasing items to the Shopee. So for example, you purchase bag, and it is stated in the Shopee that the shipping fee is different. So you simply add the shipping fee, and it is delivered, no, from the airlines to the vessels and going to the customers. So that's a freight in, no. So freight out, so that's what I mentioned earlier, that you are purchasing items on that certain company, then uh, for you to receive the item, so you're going to pay the transportation fee or expense. Okay, so that's all for the freight in and freight out. So let's proceed to credit memorandum and debit memorandum. The use of the business word credit memorandum and debit memorandum depends upon from whose viewpoints the term is used. Credit memorandum is taken from the viewpoint of the seller who is the creditor. So the viewpoint of the seller who is the creditors. The seller is the one who deal with the customers, special those customers who are asking for a debt or loan or credit into your business. Since the merchandise sold on account was recorded by the seller as a debit to accounts receivable in its book. So remember, if you are the one who sell items to your customers, so of course you simply debit accounts receivable because you are receiving the promise to pay to your customers, and then you are crediting your service, no, if you remember your previous transactions. Then in the merchandise, if there are some returned items by the buyer, so it will be recorded as a credit to the same account to effect the reduction of receivable. So if there will be returned items, so of course you will be you will be credit you will be crediting the accounts receivable para makuhaan ang imuhang utang. So example, if naa na to'y VAT giko, how much is the amount of that certain items when you bought, and it turns out that there are defects, so probably kung unsa tong imong gipalit mo po to imong gibalik, kung pila ang amount nga imong gibayran mo po ang amount nga imong gibayran, depende sa defect or katong imong i-return nga items. Okay, so in debit memorandum, we have taken from the viewpoint of the buyer who is the debtor. Since the merchandise bought on account was recorded by the customer as a credit to accounts payable in its book, the merchandise returned by the buyer will be recorded as a debit to the same account to effect the reduction of payable. Okay, so here this is the viewpoint of the buyer. So you are the one who bought an items. Okay, so and you are the one who asked for a loan, no? So si creditor kay siya man ang nagpautang, so siya ang supplier, so si debtor siya ang mangutang, siya ang purchaser. Okay, so and siya pod ang customer. Okay, and it is recorded to credit accounts payable. So if you remember the previous transaction, if you are the one who sell items, then your customers is asking for a loan, or ikaw mismo customer ka, you are asking for a credit to your supplier, so muna siya accounts payable, mangutang ka, mo promise to pay ka. Okay, so accounts payable. So if accounts payable imong madawat, then imuhang i-value parted with is what? Okay, so you debit, for example, what items you purchase. So for example, computer supplies, and then you ask for a loan or credit, so credit accounts payable. So if there will be some items that is returned, so you simply debit the accounts payable instead nga credit siya, so imo na siyang i-debit kay para makuhaan imong utang, no, or magbayad ka imong ibali, di ba? So then if pay to cash, mobayad na ka sa cash, or kung depende kung return items ba siya, especially if it is merchandising already. So kung na-return, so imo hapong ibali. So in credit memorandum, no, always remember, so you are negotiating with your customers. So ikaw ang seller, ikaw ang nagbaligya. So mo na ang accounts receivable madawat nimo, promise to pay sa imong customers, no? Okay, so I hope you already differentiate the credit memorandum and debit memorandum. So it can be either be a business document for or a simply letter of advice sent from the seller to the buyer and from the buyer to the seller confirming the receipt of the returned merchandise. So I will show to you sim the simple letter of advice sent by the seller to the buyer and the buyer to the seller. Okay, this is the sample uh, let letter of the buyer and the seller, or the creditor and the debtor. So example, we credit your account for the return of merchandise as per charge invoice number. So if you remember, if you are purchasing items to your supplier, so there's an invoice. So do not forget that invoice will be your instruments for you to return that items, because if there's no invoice or receipt, so dili gid na nimo mapa-exchange atong imuhang supplier katong imong gipalitan sa nga creditor. So next is we debit your account for the return of merchandise as charge invoice number debtor. So kaning we are the purchaser of the supplier. So if we bought a refrigerator and you forgot the charge invoice number, so of course we cannot change that items even if that items have a factory defect when it is already in your home. That's 10 days before you purchase from the invoice date. So if you misplace or you forgot where you put that invoice, so of course if you cannot present that to the owner or to the creditor, so you cannot claim for a return or replacement of your items. Okay, so that's all for the debit and credit memorandum. Okay, that's all for the introduction to merchandising business with recognition to value added tax. So the continuation with this will be posting uh, soon. Will be the next video will be posting soon. So please do not forget to watch this video, no, for you to have an idea what is merchandising business all about. That's all for this video, and thank you everyone again.